Hi, and welcome to another daily recap. So, today I'm going to recap November 25, 2025. Yeah, and it's a fresh week and it's Monday. So, let's see what happened on this day and why I didn't get any trades on both EU as well as GU. To start off, I'll start with EU and it's the daily time frame, and the swing structure is bearish, internal is also bearish, and the price has mitigated into the daily demand zone with a strong rejection. The strong rejection is the key here. So this is a bit zoomed in version. So this could be an early sign that the price might change the internal order flow to bullish to facilitate the swing pullback. So since the internal order flow is very small, I can strongly expect the price to be price to push up and take out the strong internal high and then facilitate the pullback. But that is expecting. So what is the current price action is telling me? The current price action is bearish, and this itself is a very strong POI because this POI is formed through a sweep of liquidity. So I just don't want to go against the order flow. I just don't want to fight the market. All I want to do is try trade with the price action. So that's what I'm going to do. So I'll just mark this POI and I'll just trade in line with the order flow. This is the 4-hour chart. The swing structure is bearish, internal is also bearish. As I already told you in my previous video, if the price makes a suitable pullback and then takes out this low, I'll be marking this as my swing high, and this will be my bearish swing boss. Why? Because this swing structure, the size of the size of this swing structure is bigger when compared to size of this swing structure. So this makes sense for me to mark this as a bearish swing boss. So since the price has reached the premium prices of this internal range, I can mark this as the weak swing low, but I'll just wait for the price to take out this weak internal low. Then I'll mark this as a bearish swing boss. And yeah, this is a zoomed in version of the 4-hour chart. And the price has swept the buy side liquidity, which means the price can come down. Why the price must come down? Because we have formed a new weak opening gap. So obviously, once the price took the buy sell liquidity, the next obvious target would be the sell sell liquidity. And in this case, we are clearly having a sell sell liquidity of the New York opening gap. Thus, I can expect strongly for the price to push down to fill in these imbalances and then push the price up. This is H1. The swing structure is bearish, internal is also bearish. This is weak internal low, and this is the strong internal high which just got liquidated. So both longs as well as shorts are possible from the H1 perspective. Why shorts are possible? Because price can sweep the Asian highs and then it can come down to fill in the new week opening gap. And the longs are also possible because price just liquidated the buy side liquidity and it can push further up into this supply zone. And this is a very strong supply because it has formed via sweep of liquidity and it has a ton of imbalance there, and it has also got an inducement. So this is a very high probability POI, and price may push down, may take this Asian low and trap the early sellers also. So those the stop loss orders of those sellers would be just above this high. So price can rally up and take those stop loss, read those stop losses and then mitigate into this supply and then start to push down. So in either way, it can induce a ton of buy sell liquidity just by coming down. So this is my game plan. Very simple. So yeah. But the thing here is, at 8.5, price pushed down with momentum into the New York opening gap. Thus, I can look for shorts targeting the weak internal low. Why I can look for shorts? Because this gap does not have any orders. So thus price, there is nothing to oppose the price. So this is actually a free highway where the price can rally down rapidly. And you can see there is a ton of low resistance liquidity here. The only opposing area is this week. So, and since we are having a low resistance liquidity, price may take out all these liquidities and the price may consolidate right here. So that was my expectation, and since I am having a ton of risk to reward, then I can look for shorts targeting all these liquidity pools. So this is actually phase A2, and price is also swept the buy sell liquidity, remember. So since the buy sell liquidity is taken, so price can aim for some sell sell liquidity just below this one. So this is phase A2, and price is not reacting off from high time frame POI. Is this in line with the medium time frame order flow? kind of, because this is a bullish chalk and this is bearish chalk. So price is in line with the medium time frame order flow, and MTF POI with a score of 4 by 8. So I'm talking about this POI. So it has swept liquidity. These small candles, it has swept the liquidities, and also this high, it has swept this high also, and it has some serious displacement. It has made shift in the order flow. It is unmitigated. It does not have any inducement, and it is formed. It is not formed during the kill zone. It is not stacked within the high time frame POI, and it did not flip any order blocks. So just 4 out of 8 criteria met. So that is enough for me to make this box tick. And the high time frame supporting the idea partially. Uh, See the bearish momentum and the bearish order flow in the daily, and the buy sell liquidity sweep and the bearish order flow in the 4-hour chart. So these two conditions are the high time frame biases, and yeah, they are partially supporting my idea. So that's all I want. What are the other confluences? There is no opposing demand zones, and there is a time based liquidity to target, that is the previous day's low, and there is also a structural liquidity, that is the week internal low, and this previous day's low is also the previous week's low. So both I can target simultaneously. What are the risk factors? Obviously, price as the Asian eyes above equalize and this unmitigated supply, and there is no inducement for this POI, which means the liquidity would be, this POI would be used as an inducement for the POI above. So a lot of chance for this POI to fail, but that's why we are having M15 as lower time frame for confirming my entries. So you can see that there is no inducements in the M15 also. So the only thing that I can look for is a pullback inducement via LC2A or LC2B model. So price mitigated the H1 POI. There is no lid, but other than lid, there is two other interesting things to note. Price swept the Frankfurt opening price, which can induce a lot of buyers. This price action is having SMT with GU. So this is a new concept that I created on that day. So this is Frankfurt open. So if the price takes the Frankfurt open, then obviously it would induce a lot of sellers. It would induce a lot of buyers. Why? Because once a particular high is taken, all the people would, who would follow the herd, and they just start to buy. And that's the time where the big financial institutions step into the market and capture those buy orders, and then they look to sell their orders. So since it can create a lot of buying pressure, so the institutions would start to look to sell at this point. So this is not a high, and this is not a liquidity pool, but logically speaking, it can create sell orders. So you can set a trade, but this is not according to my game plan, but still. And obviously, yeah, it created some sell orders. You can see the price rejected of this one, and it took all the the early sellers, and once it came down, and it will create some panic in the market, right? So once the price took the Frankfurt high, people would start to expect the price to continuously move up. So once the price moves down, so it would create a panic in the market, and the market works into two emotions. One is the greed and fear. When the price moved up and broke the Frankfurt high open, people would have entered into the greed mode, and once the price started to push down, people would have entered into the fear mode. So they would have definitely cancelled these orders, and then the price would move in the actual direction that it want to move. It is bullish, and it invalidated the POI. So there is a lot of psychology running behind the charts. So once you understand thoroughly the fundamentals of the forex market, then you can read each and every candlestick, even in the 1 minute chart. So price literally made a bullish chalk. So this bullish chalk will not be a permanent one, because there is an unmitigated supply. So maybe this bullish chalk is just to mitigate the unmitigated supply, and then it can chalk bearish and then continue its actual move down. So and it's just 9:53 a.m. and this candle is not yet finished completely. So all I can do is wait for this candle to completely finish printing. Then I can confirm whether the bullish presence is actually there. Suppose if there is a bullish presence, then I can mark this POI, and then I can look for longs, and I'll be having aggressive risk management, and I'll be cancelling my trade completely before the price reaches this POI. Because once the price reaches this POI, there is a ton of chance that the price will respect this POI and then push down to take out the opening gap and obviously take out the weak internal low. So this is phase D, and price tapping into the high time frame POI. Yes, it has tapped into the, so actually this box is not ticked. So high time frame supporting idea, no. And high time frame POI, the score of 4/8, yes. In line with the medium time frame order flow, yes. So what is a POI score? How do you judge it? Here is the criteria. It has swept liquidity, it has displacement, it has been shift in the order flow, it is unmitigated, and it has inducements. If I zoom into the M15, you will know that it has inducements, and it is formed during the kill zone. So 6 out of 8 criteria met. So it is a high probability POI. What are the other confluences? It has swept the Asian low, and you can see that this resembles the power of the setup: accumulation, manipulation, and distribution. So possibility is there that the price can distribute above and even take out the buy side liquidity above this PUI, but that's a different story. So as a time-based liquidity to target, yes, previous day's high, or Thursday's high. So this is Thursday, and this is Thursday high. Risk factor: negative SMT with TXY, and counter internal and partial high time frame bias. So here you go. There is the M15 inducement. There is a lid. So if I get LC1, then I'll be happy to take trades from here, and then boom. I hope there will be sufficient risk to reward for me to target, for me to close, for me to get 2.5 hour before the price reaches the H1 POI. But at 1334, there was a news. Price came down, didn't take out this lid, and it started to rally up. Then there was some low resistance liquidity was being engineered here. So this was non-kill zone. So that during this time, definitely we can expect some engineering of liquidity, and price actually engineered liquidity and did not take the sell side liquidity. It just respected this PY. It just respected this PY and started to push up, and eventually reached my take profit. So yeah, it is what it is, and I must accept and just move on. So what I can do now, since the price has reached the H1 POI, I must wait for the price to chalk bearish and then look for shorts. But it was almost end of the New York session, 13:30. So 1.5 hours more go, 1.5 hours more to go. I think one and a half candle to be printed. So within that 1.5 candles, I can't get a chalk bearish. So I just closed the EU chart and focused on GU. So this is how you save your screen time and make trading life easier. So jumping into GU, this is a daily chart, and you can see the swing structure is bearish, swing structure is bullish, internal is bearish. So zooming in, this is the current price action of the GU in the daily chart. This is the high probability supply which the price is approaching towards. So once the price reaches this daily supply, I can expect a strong reaction from this supply, since this supply is formed via sweep of liquidity. So this is 4-hour chart. The swing structure is bearish, internal is also bearish. So if the price takes out, now the price is in the premium prices, if the price takes out this low, then I would mark this as the 4-hour swing bearish boss, and this would be my strong swing high. Why? Because this high is formed via sweep of liquidity, and it is very strong protected high. So to zoom in, now I can say that the price had took the buy side liquidity. At the same time, I can also consider this as chalk bullish. So it is a bit of confusion whether to take as a chalk bullish or chalk bearish, but avoid those confusions and just see where the next liquidity pool is resting. So I can see that there is some imbalance which the price is yet to take. So once the price takes this imbalance and mitigates this PUI, we can expect a strong bearish reaction targeting the new week opening gap. So this is the H1 chart. The swing structure is bearish, internal is also bearish, and price just liquidated the strong swing high. So all I can expect is for the price to come down. All I want is the price to sweep some buy side liquidity and then chalk bearish, and I can look for this fresh PY to look for sells targeting the weekly opening gap, and also there is a ton of low resistance liquidity which I can easily target. For longs, I need to see the price take out the Asian high and the bullish IBOS, then I can look to continue this bullish IBOS from this POI, and then I can look to target this 4-hour supply. I know that the risk to reward will be very minimal. Suppose if the entry candle, that is the liquidity candles formed, is very small, then I'll be lucky enough to get the desired risk to reward. Otherwise, I need to do aggressive risk management and take whatever the market is offering me. And yeah, price actually formed a perfect equal highs and then made a strong bearish push down, taking out, filling out some of the new week opening gap. Now I can look for the phase A2 shorts. Since the price is not reacting off from any high time frame POI, I am taking this box and it is in line with the medium time frame POI because price has chalked bearish, and this POI is a high probability POI because it has ticked 4 out of 8 criteria. What is the criteria? It has swept the liquidity, it has a ton of displacement, and it has made shift in the order flow, and it is unmitigated. And the high time frame is supporting my bias because the daily is actually bearish. So I can take that daily bias as my support and place this trade. What are the other confluences? There is no opposing demand zones, and there is a time-based liquidity in the form of New York low as well as the previous week's low and previous day's low. And there is also a structural liquidity to target, that is the weak internal low. What are the risk factors? Obviously, there is an equal highs and Asian highs combined liquidity above, and there is no inducement for this leg. So when there is no inducement, so this high would be treated as an liquidity point. So entry method, all I can do is just enter with LC2A or LC2B or the M15 confirmation entry. Apart from this, there is no LC1 because there is no lid formed in the bearish leg. And we got a perfect LC2A model because there was this fake break and the pullback inducement up to this POI. I decided to place my trade right here at 1323. Let's see what happened. And boom, price took out the supply and took the Asian highs. So there is no trades. And since there is a strong bullish reaction, but I don't think I'll get an opportunity, but I can expect some trades tomorrow. Why? Because it's 1407. So this is the last candle that is getting printed. So even if the candle comes down, and even if the candle finishes printing and comes down, that would be 15, and that would mark my end of my session. So I can't trade during the New York lull as per my strategy. So I can save an hour and get out of the screen and enjoy some personal life. So this is how you simplify trading and make it fit to your lifestyle. You should not fit your lifestyle to trading. You should make trading fit your lifestyle. So that's it from today. See you tomorrow on November 26, 2024. Until then, cheers guys. Bye.